If you are successful, your company actually scales and you actually become good at what you do. And then new kinds of people need to come on board, right? So even Mark Zuckerberg needed Sheryl Sandberg. Companies need to curate. So you need to curate your team for the right time.
You're the Singaporean VC that funded one of Indonesia's biggest tech unicorns that came out in the last 20 years, right? That's Gojek, which is now GoTo Group.
So Nadiem Makarim is the founder of Gojek. And when we first met him, and I still maintain this, if you ever meet Nadiem, he's got the most amount of charisma. And does he have delusions of grandeur? Absolutely. But it was very clear from day one that Nadiem was...
Hien is the founding partner of Openspace Capital and is behind some of the most iconic investments within Southeast Asia. He invested in Gojek, Bonito and Lucence when they were all in their early stages. In today's conversation, we talk about what he thinks makes a great founder, the intricacies of being a venture capitalist in Southeast Asia, and where Singapore can thrive in the age of AI. And welcome.
Thank you very much. By the way, this is one I've been waiting to do actually.
Take us back to 2014 when in the early days of Openspace Capital, before you were like a behemoth in the VC industry, you guys had maybe a smaller, humbler beginning. Take us through those early days.
All things start small, Kia. And I think that's the first thing that I really enjoy is that you build things from scratch. And so a common question that has been asked to me was, you sold Asian Food Channel. It's now called Network, but it's Channel. Why become a venture capitalist? So in 2013, 2014, what the Southeast Asian and what Singapore ecosystem was suffering from was a gap in essentially structured venture capital, right? Series A money, which was not abundant in that time, is the gap between seed capital, which there was a lot of supply, and say, private equity type money. It's really where the salt water and the fresh water meets at the river. So you got to be kind of like a weird animal or weird fish to survive in that environment. You have to be part entrepreneur, part product market fit person, but you have to also be part like a person who can do Excel spreadsheets and so on and so forth. So Series A money in the venture capital world, which we started off as a specialization, to me really is the most interesting part of the value chain. And at that time, Singapore didn't have enough of it. So when I sold Asian Food Channel and I was angel investing on the ground, I recognized that problem and I teamed up with my business partner, Shane Chesson. So Shane was the former head of tech investment banking for Citi. And we put together Openspace Capital primarily to solve that problem. And we got Temasek on board as a anchor investor. And our first close was actually $30 million. And then we parlayed that into a $90 million first fund. So that's how we got started.
Back maybe in 2014 to maybe the late 2020, there was a huge e-commerce boom. Everyone was investing in e-commerce players. It doesn't matter if you're a shopping platform or retail brand. As long as you're going online and you're doing shopping, people are investing in it. So by definition, you probably have a glut of opportunities. How did you filter for the right ones to invest in?
So you have to look over cycles, right? So I believe that every 10 years, something structural changes, right? So we talked to when I first started my career as a tech banker in 1999, the internet came out. And so that was the revolution of information that you can get anywhere in the world, right? Through a computer. But by 2010, the mobile phone revolution sort of kicked off. And so now you can get information anywhere, anytime, ubiquitous, right? And I believe now, 10 years later, 15 years later, you have knowledge and intelligence anywhere, anytime. So that's AI, right? So in 2010, it was very clear to us that the mobile phone brought a different distribution mechanism. And Southeast Asia was very unique in the sense that it never had a established base of PCs, say in the second and third tier cities of Indonesia or the Philippines, right? You look at China. China actually had a gaming revolution, had a PC revolution, and then you went to the mobile phone revolution. So Southeast Asia was just brand new. And so the joke we used to say, where we talked to investors, and it was a relatively new concept, and we needed a soundbite, was 600 million people just got their mobile phones, and they don't know what to do with it. From that, you segment into all the different services. So you could do fintech, you can do health tech, and of course, one of the biggest GMV ones was e-commerce. So that's why e-commerce became such a big thing over the past 10 years. I think it's actually inaccurate to assume that therefore it'll be the same in the next 10 years. So that's why the past 10 years have been really, really good for Southeast Asia, because it was about digital distribution. It's about the mobile phone revolution. And that's how we got all these wonderful new companies in the past 10 years.
You have the opportunity at the high level, but you also have to filter out for the right founders to back. So for example, for every one Grab or Gojek, there might have been like 10 or 12 other competitors trying to take their money. So then the question is like, how do you choose or how do you select the right founders for you?
Well, let's assume that you kind of figure out what the right business model is, right? And I think as a venture capitalist, if you stay in that space and you just meet a lot of companies, you meet a lot of projects, you'll start to see the trends, right? So it was very clear that we saw that e-commerce was important. Female e-commerce turned out to be the one that has the best metrics.
Mm-hmm.
And then you start seeing like 3 or 4 different companies. And then you got to make a decision like which founder you back, right? Yeah. So the story I always tell is that we looked at about 32 e-commerce companies. And before we decided that actually female e-commerce was the most interesting. And then we boiled it down to essentially 2 companies. So one was called Love Bonito, and the other one was called Pomelo Fashion. Have you heard of Pomelo Fashion?
Yeah.
Right. So do you know the background of Pomelo Fashion?
Not really.
Yeah, so Pomelo Fashion was started by David and another co-founder. Really, really smart guys, right? They've got an excellent track record of education. I think they come from Ivy League schools. And suddenly when they came in, they had their 2x2 metrics. And, they used to work for either Zalora or one of those rocket internet companies, right? And so in a boardroom, they were very impressive. I then met Rachel, and in those days, Viola, right? The CEO, Dion, hadn't been recruited at that time. And I just met people who were very good at understanding the female customer, making clothing for their Asian customer, but they had no 2x2 matrix. Yeah. So in that regard, right, Keith, and I'll pose this back to you, like, you're in the boardroom of venture capitalists. Like, who do you choose?
If history teaches us anything, it might be the customer-centric founder that might win.
And also street smarts and that kind of stuff, right? And Love Bonito, by that time, it already made like $6 million of revenues. It was like profitable, right? So you have to always give that credit for that. But, the partnership was in 2 minds. Like, do we want to back people who are, good at the presentation of a business versus a person who is good at the raw guts of the business? So I famously told the firm, I said, what do you want to do? Like, back 2 people with no 2x2 charts, but, have to learn how to make female clothing, or 2 people who not do female clothing, but have to learn how to do 2x2 charts. And I will be very clear about it. The situation was like, there was no like planning, right? Like I would ask Rachel, so what is your customer acquisition cost? You'd be like, what customer acquisition cost? We just post on Instagram to our thousands and thousands of users and we do it. So at scale, it becomes a challenge. Where I bring that from was, to me, and this is just my personal philosophy, I look for founders who have got certain qualities. And the one that had really the interesting perspective was people who just were emotionally authentic to the mission of selling women's clothes. And I believe that over time, I could help build out the rest of the other functions and capabilities that Love Bonito needed in order for it to be a large company. Today, it is a large company. Today, it's got sizable revenues, and today we want to IPO it on the Singapore Stock Exchange.
Mm.
So I think that's how I think about things and how I select founders. Now, through the years, I have never really figured out a framework as to how to encapsulate what is a perfect founder. But over the past 12 months, I kind of have an idea, and that's why I'm writing a book, and that's why I'm trying to come up with a framework.
You have to tell me a little bit about the framework.
Yeah. So after doing this for 10 years, I have probably met about 3,000 founders, right? So I meet about 5 founders or founding teams every week. And this is after we filter thousands and thousands of companies. Right? So Openspace gets about 3,000 business proposals. We do due diligence on like 500. I end up meeting about 250 teams a year. So about 5 teams, one-on-one. Like if you and I were sort of having a conversation about investing, and this takes an hour, this would be, the kind of interaction I'm talking about. So not just like a 3-minute like elevator pitch, right? Like really talk about your background, why you're building the company and all that kind of stuff. So over 3,000 conversations later, I have a theory about what it takes to be a great founder. And I call this framework the trusted framework. So TRUST. So what are these things, right? So there's 4 qualities and a balancing fulcrum in the middle. So T is first principle thinking, right? So a lot of times something changes in our lives that disrupts all the assumptions that has happened, right? So a very simple example is the invention of the motor vehicle, right? So once you had motorized transport, you could create suburbs, and suddenly farmland became very valuable. Of course, you had to build the roads, and you had to wait for cars to get really good. But this assumption that we all just live in nuclear cities and we walk around as opposed to have a suburb. If you're a real estate investor, that would be your first principle thinker. And that's hard because you really need to have a conviction about a piece of the future where at this point of time, nobody agrees with you, right? So why I call it first principle thinking is from that perspective. You then need the second principle, which is resilience, because you now have to journey that first principle thinking and you never really know when it actually sort of flips. So imagine the guy who did Zoom, right? So the founder of Zoom said, video conferencing is kind of okay, but I'm going to make the best gosh darn video conferencing. And he did it for many, many years. And then it needed COVID to really then prove to everybody that video conferencing was really the future. And then we have Zoom as a dominant company. So you never know when that thing flips. So the unreasonable thinking and the resilience creates what I call the unreasonable mindset. Right. So you're just an unreasonable human. You just have this conviction. You know, and anything that is reasonable today, I would argue was unreasonable previously. Right. There's so many different examples. Even podcasting, like you and I, like being able to record something like this. When I did Asian Food Channel, it took a lot of money to do this. Now we just walked in here and we did it. What is reasonable today was unreasonable at one point in time. So those are the 2 fundamental qualities. Those are non-negotiable qualities. You have to find somebody like that. And sometimes people with great educational backgrounds, they've gone through a lot of wonderful things in life, but they never really went through hardship. And that's why I kind of like street smart type individuals in the first place. The other last 2 qualities is self-learning organism and a team curator.
Yeah.
So on the other hand, you have to also know how to take feedback. You also know how to think about things. You can't be such a megalomaniac, narcissistic, crazy person that you don't listen to people. And by the way, this industry is littered with so many people who are completely delusional and they just don't listen to people. And as a result, things blow up on a long-term basis.
Yeah.
The last thing, of course, is being a team curator, which is that over a period of time, if you are successful, your company actually scales and you actually become good at what you do. And then new kinds of people need to come on board, right? So even Mark Zuckerberg needed Sheryl Sandberg. Companies need to curate. So you need to curate your team for the right time. And you need to know how to step back and say, actually, I shouldn't be the CEO anymore. Maybe I should be the head of product, or maybe I should be the chairman. I should create a pathway for my project, my originally unreasonable project, to become a reasonably, large, profitable, cash flow generative institution that the world can rely on. So I think these are the 4 characteristics of which the middle bit, unreasonable mindset, is the fulcrum, because the first 2 always conflict with the last 2. You want like a megalomaniac who's also open to feedback. You want a dominant leader who will never give up, who also knows how to step aside when the time is right. It's like and that's why the industry always has stories of CEOs being changed or replaced or forcibly replaced, because by definition, I think this is a very hard industry to pick up and to actually make successful.
So do you think there is a founder that you have backed in the past that kind of exemplifies this?
I've thought about that, and I think my quick answer to that is, by definition, you'll never find, or I haven't yet found, somebody who, when I first meet them, has all 4 of these qualities.
Yeah.
I think the whole point of this framework that I've come up with is to identify what the strong points of that person is, and then see whether you can work to create the other two. And also identify red flags. So like one of the big red flags, which I, talk very openly about, is the person who is a complete narcissist, right? He can raise a lot of money because they've got grandiose ambition. They're really, really good at presenting, but they never listen to anybody because the egos are so fragile, right? So a person who's a narcissist, like a full-blown narcissist, has a fragile ego. And so when you start trying to give that person feedback, it all falls apart, right? But on the other hand, if you don't have narcissistic tendencies, if you don't have some delusions of grandeur, you also can't be an entrepreneur. So I think it's more about, I created a framework so that I can figure out from a metrics-based framework how to think about whether this founder has this quality or not, and how to work with them to actually get them to the next level.
You're the Singaporean VC that funded one of Indonesia's biggest tech unicorns that came out in the last 20 years, right? That's Gojek, which is now Go2 Group. That seems almost like an anomaly that you're not in the home market, yet you could still find such a deal.
Openspace is actually a group of about 40 individuals in 6 countries. I have a head of Vietnam, a head of Philippines, a head of Malaysia, a head of Thailand, obviously Singapore, and a head of Indonesia. So when we started Openspace Capital, the thesis was that Southeast Asia was actually a very interesting region, right? China and Southeast Asia roughly is going to represent about half of the world's growth, GDP growth. And Southeast Asia actually is slightly larger from a GDP perspective than India. People always never realize that. Yet Southeast Asia has its complexities. It's not one contiguous country. So we've always been, as a firm, trying to figure out how to work. So we actually have a very, very strong Indonesian franchise. It started by our partnership with an Indonesian private equity group. And then today we have a very full-blown Indonesian team. When we do deals in Philippines, it's a lot of times our Filipino team speaks in Tagalog, and same in Vietnamese, in Vietnam. And so we had the on-ground experience to actually find Nadim and those kind of folks. So we're not really a Singaporean VC in that regard.
That aside, you could still, among the sea of competitors, be able to find a unicorn like this. And they're doing well. I wanted to know, how did that deal come about? What do you see in the founders in those early days?
So then we have to talk about Nadim, right? So Nadim Makarim is the founder of Gojek. And when we first met him, and I still maintain this, if you ever meet Nadim, it's got the most amount of charisma. And does he have delusions of grandeur? Absolutely. But yeah, he's open to feedback, right? But he fights his ground and so on and so forth. But it was very clear from day one that Nadim was, in my essence, like founder material. He understood the first principle thinking. And the first principle thinking in Gojek was that you could kind of do a Uber model, but on motorcycles. And then actually the second theory was that the capacity utilization was going to be higher, because in the peak hours when there was taxi-like services, you could do it on a motorcycle. And then off-peak hour, you could like deliver parcels and that kind of stuff, right? Obviously, the model has changed significantly, but I'm bringing back to that time. And we did the economics, and it was much cheaper to do it on a motorcycle. And Indonesia is only the only country where a person would get on the back of a motorcycle and use it as a taxi. So he understood that, he communicated that very strongly, and he was just a very stubborn individual. So based upon that, we made the bet. I think, although in this business, you must remember, it's easy in hindsight for me to tell the story and say, therefore we got it right. There are a lot of founders which have the same qualities that we back, and because of the industry dynamics or because of other things, it just doesn't work. So it is a bit of a numbers game, but essentially that was what we saw in Nadim. And I still love the man to bits. Every time I meet him, the amount of energy he exudes is incredible.
If we looked at the past, right, you kind of, in the past 10 years, you rode on this e-commerce wave, this digitalization wave. And I like the fact that you talked about this mobile phone revolution, where the access to the distribution of the information, the cost of it dramatically decreased. So now we're entering, and as you put it, and as many others have put it, is you're having now widespread access to intelligence at a very cheap price. And that has created a paradigm shift. So now we see that this whole AI boom that's happening before our eyes. Naturally, the question is, if you ask anyone on Wall Street or any person in finance, is this a bubble?
The futile question to ask? Like you got
What I mean by that actually would be that it is a bubble. We can assume to a certain extent there are bubble-like qualities, but maybe there are other caveats that one should note, and not just dismiss it as maybe a tulip.
Yeah.
Because maybe that's not the right analogy, right?
Well, there are bubbles and then there are bubbles, right?
Yeah.
So first and foremost, let's exclude what it is not, right? It's not a tulip-like bubble. There's actual inherent value in artificial intelligence, right? We use it, ChatGPT, we talk, it's pervasive. And the demand is going through the roof. Like I just met with a friend of mine who's a senior person in one of the three hyperscalers. So there's Amazon, Microsoft, and Oracle. So you can guess who he works for. But he was just telling me like demand is through the roof. Once we build a data center, it's done. Like the capacity is booked and people just want it. And I was like, you're kidding me. He goes, no. And he said this one specific thing. You don't understand, Hien. If just say, for example, everybody on WhatsApp starts using large language models, think of the amount of compute that we need to install to just proliferate that. So the demand is there, the use case is there. Now, whether people pay for it is another thing. And that's exactly why, people think of it as a bubble. But the way I look at it is that there's going to be one or two companies who essentially win a large part of this market. So I always say, where are you standing? Because if you're standing in the wrong place, you're in the bubble. If not, you're going to make money. The guy who invested in the fourth version of YouTube did not make money. But if you actually invested in YouTube and YouTube became the dominant thing and Microsoft, I think Google paid like $1 billion for it, you made money. So a bubble is simply because everybody will come through my door and say, I'm going to be the one that, takes 80% market share. Therefore, you should pay $200 million for, the company that I've only just started. That's called a bubble. But if it turns out that you're right, then you weren't in the bubble. So we are definitely in an environment where people are demanding very, very strong valuations for certain kinds of business models in AI.
It might be useful to kind of unpack that a little more, right?
Sorry, maybe I'll come back. It doesn't mean that it's wrong. It doesn't mean that it's all going to end up in tears. It doesn't mean that it's going to be like the tulip bubble and it goes away and we never use tulips again, right? I mean, there have been bubbles which are artificially generated, which were hyped up. Was it the ape monkey painting? What's it called? The
NFTs.
Yeah, the NFTs. I don't know whether they're going to come back, right?
Yeah.
But this thing has got value. I guess that's what I'm trying to say.
During the .com bubble, so many fiber optic companies that went bust, right? But because they've laid the fiber optics, now today we enjoy the benefits and we, in the moment, perhaps underrate or are unable to conceive of a future where our lives are fundamentally different, this paradigm shift. And like even an example of the internet is like now, if you go to any Fortune 500 company, they can't run without the internet.
Yeah.
Right.
So I was literally there in 1999, right? So I'm 50 years old, right? So I was literally there. And you talk about companies like Global Crossing, Asia Global Crossing, WorldCom. Jack Grubman was a very famous research analyst that worked at Citigroup Salomon when I was there. And the whole fiber laying was because of tremendous excitement of the fact that, we're going to have a different way of doing communications, right? And it turns out that after 15, 20 years, that revolution is actually correct. It's just people got too excited. You know who actually made money? A Singaporean company, ST Telemedia. Our wonderful ST Telemedia. So when Asia Global Crossing went into bankruptcy, they bought the assets of Asia Global Crossing. Quietly, ST Telemedia is one of the largest data center operators in the world. They own significant minority stakes in many data center companies in the world. And they made money. So it's just really a pricing issue that happened during the 1999s. People got too excited about it. But at the end of the day, the revolution came through. Now, the other thing that was very interesting, and I was talking to a friend of mine who was a very senior Chinese venture capitalist, and he says this is why life is very tough, was that in the Chinese context, as the Chinese mobile phone revolution happened, you had, companies like Meituan, you had companies like Baidu, you had companies like many, many of these kind of Chinese internet giants. And every time there was a round, it just felt like you were overpaying. But if you didn't pay up for that price, you would have missed one of the greatest trajectories. I mean, he invested into JD.com when Richard was not really that big. He made so much money. So he said, on the other hand, if you didn't believe the hype, the mistake in that situation was you didn't actually lean into the valuation because you were too gun shy.
Yeah.
So then he said, I don't know how to do this because once in a while you get it horribly wrong. And even if you become too gun shy, you also get it horribly wrong. So in both scenarios, get horribly wrong.
Example you gave about YouTube being acquired for $1 billion. At that point in time, it seems insane. But if you look at the many billions that YouTube generates alone for Google today.
But they didn't have that revenues at that time.
Yes.
You see?
Yeah, precisely.
Yeah.
which is like a chicken and egg issue.
So you come now, right? People go like, oh, $1 trillion worth of capex is going to go into AI data centers, but only X amount of revenues are generating. So clearly this is a bubble. I've read so many of this analysis. I'll just give you one business model, right? And I love this business model because it's the one that everyone sort of wakes up and goes, oh my God, Hien's saying this again. AI girlfriend. Right,
Okay.
Keith?
Yeah.
Right? AI girlfriend, right? Would you pay $100 a month for an AI girlfriend? I think there are people who would do that. And I use AI girlfriend because there's also AI boyfriend. By the way, in China, AI boyfriend is very big. Right? So AI companion, right? Completely new business model, completely new revenue. If you try to analyze what is available now versus what could be in the future, doesn't make sense.
Yeah.
Facebook, right? When it first came out, to think that Facebook was going to dominate the advertising business, destroy newspapers, destroy so many other traditional media, destroy television.
Yep.
Right? I knew a lot of people who were original investors into Facebook back in the day. I knew Shou before he became the CEO of TikTok. And, he would just tell us like, you don't understand. Like the pace at which this thing is growing, we will find a revenue model and we will basically, generate significant revenues. Once in a while, that really happens. So this is why I always believe things that are reasonable today were unreasonable at one point of time. Yeah.
So take me through the economics of as how you've described it, this AI arms race. Who are the major players? How are the people who are investing in it figuring out the unit cost economics?
Yeah. The way I think about it is that your business model doesn't work until it works. Okay, so what do I mean by that? So say, for example, you're going to create an AI companion or even better yet, okay? Say, for example, we're going to make a digital version of Keith, right? Because people just want to talk to Keith, right? And a really dystopian way of looking about it is, say, for example, I have a friend who's diagnosed with cancer and I know that I'm going to die in like 4 years, but I want to make sure that my kids be able to talk to me in 20 years' time. And let's not talk about like the grief part about it, how dystopian it is, but you could take everything that you have written, everything that you have said, your likeness, everything, and we can put it into a cold storage, right, of depository of information. And we would wait until the time was right, and then I would generate a digital version of you through large language models, video models, so on and so forth. And lo and behold, there is a digital version of my friend when we can talk into perpetuity. At this point of time, you probably do it for Lee Kuan Yew, you probably do it for Nelson Mandela, you probably do it for like Abraham Lincoln, because the sort of value of that is significant. Less so for Hien, right? Because not everybody wants to have a digital version of Hien. If the cost drops to a point where it's affordable for everybody to just have a digital version, all hell breaks loose.
Yeah.
So that's what I mean by the economics. I'm going to pause there. Does that make sense?
Yeah, it makes sense.
Right?
Completely.
So then the priority is to reduce the cost of compute, to reduce the cost of intelligence. So how do you do that? Right? So number one, right now in the AI world, there is sort of two thinkings. One thinking is I'm going to make the one model that rules us all, right? So ChatGPT 5, ChatGPT 6, and we're going to have like 2 trillion tokens and 5 trillion tokens. We're going to have like massive training runs.
Yeah.
I'm going to be like Elon Musk and put in 250,000 GPUs and run a gigawatt of electricity. By the way, a gigawatt of electricity, just to give you a frame of reference, Singapore uses 13 gigawatts. When you say I'm going to use a gigawatt of electricity, that's the entire data and electricity usage of all the data centers in Singapore alone. And people are now talking about doing a gigawatt training cluster, right?
Yeah.
So then what happens is that there's also this idea that we're going to make models that are smaller, leaner, more efficient, and then put it on your mobile phone. And so you'll have distilled versions of, DeepSeek and distilled versions. So there's two sort of methodologies there. And then the third thing is that we'll train your information perhaps on the smaller model. And by the way, small models like 70 billion, right? And those training runs will use, say, 1,000 GPUs, and you'll create a digital likeness of you. Now, we haven't seen that before. Can you imagine if that's actually done, right? Suddenly, there's a completely new business model. I would pay $10,000 to make sure that my kids can talk to me after I'm gone.
Yeah.
If that training run exists. Now, why hasn't that happened? And this is a bit that you have to be, it's now be a bit technical for your audience, which is that it turns out that it's actually hard to do a training run.
Yeah.
Like specifically, everyone talks about this software called CUDA, right? So we've heard of this idea called the CUDA moat. And everyone says NVIDIA is dominant because they have a CUDA moat. And the real reason for it is that actually NVIDIA is dominant right now in terms of revenues because they're the only people who can deliver clusters, tens of thousands that you can orchestrate to do a training run. If you actually want to run a model like inference, there's an argument that you can use AMD, and soon you'll be able to use things like TensorRT and other new generations of technology to do it. But if you want to do like a full-blooded training run, you pretty much have to use NVIDIA. If you're in China, you'll probably be able to use Huawei or something like that. And then you have to run a training abstraction. Here's the interesting thing. It turns out, and I just recently found out, that actually NVIDIA doesn't really provide you with the state-of-the-art training software abstraction. OpenAI's got its own version, Google's own version, DeepSeek's got its own version. It's not a well-known fact. I just figured this out. So even if today, if the Singapore government wanted to run a healthcare training model, specialized about it, there's an argument that it's very hard to do because you still need a specialization, a team of software engineers who make that orchestration software. Now, NVIDIA's got one version, which is above PyTorch, which I've been told is not bad. But if you really want to drive down, you have to have your own capabilities. The day a software company comes up and says, I've actually got a software training package that you can use, and people outside of OpenAI, Google, and everybody else can use on, say, 1,000 cluster training run, and I can train your likeness in 7 days as opposed to 7 months, then the business model becomes very interesting. Then the revenue opportunity transforms.
Yeah.
And then the criticism that this is all a bubble and where are the revenues changes.
Yeah.
Does that make sense?
That totally makes sense, right? Like it reminds me of the story of pets.com, right? Everyone uses it as like the laughing joke because like they failed primarily because the cost of distribution for me selling pet foods to your house was too high, until the unit cost of delivery of those goods now
Comes down.
It's come down, and now like you have PetSmart.com, which bought the domain name. You earn like $6 billion a year, right? Just from
So it turned out you could do it.
So you could build like a multi-billion-dollar company from that.
Yeah.
When the cost of distribution changes or dramatically lowers. So
I always joke. I think that somewhere in Silicon Valley already has a sentient AI in his basement, right? Some billionaire has it, but it's just that it's a little bit too expensive for everybody to have sentient AI.
Okay.
But just to build on that point, think about like what I just did and bringing it back to the founders, right?
Yeah.
So if you're trying to answer a very simple question, well, not a simple question, but a simple to understand concept, is this a bubble? And then you go onto LinkedIn and people go like, oh, the revenue's not there. And then somebody goes, the revenues will come. Don't worry about it. Right? You have to actually go deeper and say, visualize what could be the things that generate the revenues.
Yeah.
So then I actually then went and said, maybe it should be like a training cluster, which is 1,000 GPU. So then I ask people and they go like, can't be done right now because it's too complicated. But then I go, if I found a company in the world who actually specializes only in making small model training software, I would invest in that company. So again, you can see, right? Like first principle thinking becomes critical, even as an entrepreneur, as an investor, if you're trying to invest before the S curve flips into that inflection point. Yeah.
In the current, say, AI race, right? Like, what would a winner look like? I think you pointed out that maybe it's one that solves a very niche problem. You solve the software, you solve for maybe the software package that allows you to democratize access to the coordination layer.
At this point of time, I think that what we're doing as a sort of as a mental model is to build all the infrastructure layers, right? So somebody's got to figure out a chip that is like even more powerful or even more power efficient. We've got to figure out cooling systems to get the energy out, right? So I'll give you a specific example. The H100 server, right? Don't even talk about B200 or B300. The H100 server is a server that is roughly about this size. It's called 6U, right? So it's about 60 cm by, I don't know, 45 cm. That thing has got an energy load of 30 kilowatts, right? So 30,000 watts. A hair dryer is 1,000 watts. And essentially when you compute, that's all it does, right? The silicon is a resistor and it generates heat. So imagine 30 hair dryers, turn on full blast, put it in that little space. Congratulations, that's the heat that comes out of one H100 server. Now put 5 of them there. So you look at the rack now has to be like 150 kilowatts. 10 years ago when we were doing network equipment, it wasn't 150 kilowatts, probably like 12 kilowatts. So that infrastructure has to be changed. The cooling system has to be changed. The electrical system has to change. Everything has to be changed. So at this point in time, all the business opportunities you see are really building the infrastructure. And I'm starting to see the software abstraction becoming important, right? Like a training cluster software, orchestration software. Agentic is now becoming interesting. Where I think the Cambrian moment for AI for Southeast Asia is when we have this thing called the agentic revolution. So what do I mean by that? When AI moves from just intelligence to actually being a robot, right? So if you book a ticket, if I tell the AI to book a ticket and it books a ticket for me, that's a robot, right? That's the definition of robot. It's not actually it's like somebody who does an action for me that is reliable, that we can trust for it to execute well, right? And you're starting to see things like that happen. And that's what the agentic revolution is supposed to be about. Here's the interesting thing about it. You don't have to, today in Singapore, if you wanted to be a founder and a startup founder, you don't have to have 10,000 GPUs and train some sort of fundamental model. You just take the large language model, you add it into something called LangChain, which is an MCP agent. I mean, there's a few of them. And then you can create robotic interactions. So what I mean by that is we, for example, invested in a company called Chope, right? So it's a restaurant reservation business. Well, how do you reinvent a restaurant reservations business in the agentic world? So I'll give you an example, right? I would call this business Hey Gorgeous. Right?
Okay.
So Keith, you download literally just a phone number on WhatsApp, and the service is called Hey Gorgeous. So you type in, you go, hi, and Hey Gorgeous comes back and she says, hi Keith, hey Gorgeous, what do you want to do, right? See, I made you smile. See, emotion is very important when you deliver services. So you go, oh, this is great. It's like, hey, I'm going out with my friends, 4 of us, birthday party, Hian's coming. I want to take them out. Great. I'm going to spend $2,000. Like, can you recommend a place? And then Gorgeous comes back and says, no problems, Keith. I'll take care of you. You stay gorgeous, right? Cheesy. And then she goes and pings, right? The agent goes and pings all these restaurants and say, private dining for $2,000, what can you deliver? Give me what you have. Like, are you going to give a free bottle of wine or whatever? And she gets 3 or 4 offers for you, right? And then she comes back in 10 minutes later and says, hey, I've got these 3 offers, which you want? And you go, oh, I like this one. And they say, okay, I'll book it. And then, of course, basically, she goes to the API at Chope, she books it for you, and she pays $1 per reservation. So she pays $4 or $5 to Chope, right? So Chope gets $4 or $5. But behind the scenes, this business model could mean that I go to the restaurant and say, if you want this reservation, because I didn't tell you who it was, I need a 5% take rate of the $2,000, right? And then suddenly the revenue model changes. So that is what I mean by there will come a time when these AI business models will generate additional revenues, additional value, additional productivity, by the way, right? And it won't necessarily be these headlines that you hear about Mark Zuckerberg committing to the US government to invest billions and billions and billions of dollars in infrastructure. That's going to get laid down, I think, in the next 3 to 5 years. But we're starting to see the Cambrian moment of these agentic models start to appear.
The internet revolution, the headlines back then were fundamentally not the ones that really changed the way we operate.
You had Amazon.com, and then you had Love Bonito.
Yeah.
So you get this kind of like scaled down version of the same paradigm, right? Yeah.
I wanted to ask a little bit more about, like, maybe I won't say the bottlenecks or constraints of the way we approach AI investing, or what would the worst case scenario look like? So if like one was to use the .com era as an analogy, it's just the amount of, for example, capex, or the amount of investment now for you to build an AI company. Now it's much more capital intensive than it was in the .com era, right? And it's going and also like you're building out massive factories that are gonna be, like, if let's say it goes bust, right? It's just gonna be a idle factory there. What are your kind of views or your kind of counter arguments where people say that, hey, when it goes bust, it's really gonna be a lot of tears everywhere?
Well, first of all, there's going to be tears. Let me tell you. Hey, a lot of people are going to lose a lot of money investing in AI startups.
Yeah.
Let's just be very clear about it. This has happened all the time. Because if there are 4 amazing AI startups, only one's going to be the big behemoth. The people who invest in the other 3, they're going to be tears. I think that the question you ask is like, is this capacity going to be used, and how fast is it going to get used?
Yeah.
And I think the answer right now is it is totally going to get used, and it's going to be there for a long time. The question, of course, is like, is it going to be overbuilt? That's a very hard question to answer. So I think generally the challenge is not whether it's going to get overbuilt, but what you're building right now becomes obsolete faster than you think it is. Okay, so I'll give you an example. So a lot of people started up, say, for example, you were going to generate tokens for a specific large language model, and you use some GPUs, and you sort of model it out, and you say, oh my gosh, I'm going to make a lot of money once it's all installed. But by the time you install it, you put everything in, the next version of the GPU comes up and it's cheaper, it's faster, and then the price of the token drops. And we've seen this. The prices of tokenomics are dropping like an order of 10x every like 12 months. I mean, don't quote me on this, but we're on the podcast. But something crazy like that, right?
Yeah.
So then your original business model is screwed.
Yeah.
I think that's what's going to happen. I think there are going to be situations where people have an optimistic view about how much a service is going to cost, but just by definition, it's going to get cheaper faster. So I'm a big fan of, investing actually, interestingly, in like the chip side, because I think, number one, compute is going to be absolutely needed. And I feel like there are some companies in the world who are driving the cost dramatically. And there are many ways of doing that, right? So inference is a very different value proposition than training and stuff like that. And, for the record, I just believe that NVIDIA, while being a very, very powerful, very, very valuable company, won't have the market share that it has right now in 2 to 3 years' time. And it's actually, ironically, it's because there are certain markets which NVIDIA doesn't want to go into, right? There'll be other inference models, other inference abstractions, there'll be other deployments. There are a lot of companies who just want to spend $20 million to build a trading system, or a bank. They want to spend $30 million to build a on-premise agentic customer service support. And maybe NVIDIA is in the business of like rolling out huge abstractions. There will be customers, and there will be space for more than one player. And so that's where I think it's going to move.
Naturally, the follow-on question would be, who are the other players that you see coming out? I mean, I spoke to someone like Stephen Witt, who's looking at NVIDIA, and his argument was that, you would have other players, but maybe they won't be able to compete with NVIDIA. And your argument is that maybe it's just completely different segments altogether.
So I watched that Stephen Witt video, and I think anybody who really wants a great abstraction of what Jensen's all about. You should really rewatch that. That was a great video, by the way, Keith. Uh, I think that the challenge when you're understanding this is you need to have a technical background, and then you really understand that some of the representations he made really needs to be teased out. So one of the representations he made is this idea that CUDA is dominant, right? And CUDA is the moat. And I would disagree. But on the other hand, he makes a very valid point, which I think is not going to go away. And that is as follows. Today, if you're an AI engineer, you actually don't work on CUDA. You work on PyTorch. Have you heard of this thing called PyTorch, right? So PyTorch is the language that everyone thinks about. And then after you program in PyTorch, you accelerate the thing down to the GPU using something like CUDA. So PyTorch has got 4,000 operators. So plus, minus, times, divide, those are called operators. There's 4,000 operators, 4,000 mathematical instructions that you can call on Python. Of that 4,000 mathematical operation, 1,000 are really, really critical when you're doing AI, matrix multiplication, all that kind of stuff. And so CUDA accelerates those 1,000. So the best way for your audience to understand this is like, think of a GPU as your personal assistant. They can do every single thing. They can help you schedule your appointments. They can get your coffee, whatever. But then maybe 50% of your load is actually travel bookings, right? And in that regard, your personal assistant calls a travel agent or uses Expedia. There's a specialist travel agent. So 50% of that workload goes to a specialist thing called a travel agency. That's exactly what CUDA does. 50% of a CPU workload when it's AI calls for matrix multiplications. They just devolve it down there. And CUDA is the software language, is that software library that is connected to Python and PyTorch that runs the GPU abstraction. Now, AMD's got the same thing. It's called ROCm, right? So if you wanted to use AMD, you just go like install ROCm. So you load Python, you install ROCm. And to you, if you just work on Python, it doesn't matter. You work on PyTorch, it doesn't matter. How the engine runs, is it 8-cylinder engine, 12-cylinder engine, rotary engine? You don't care. But what Stephen Witt made as a very interesting point is that the next version of PyTorch, every new version of PyTorch, right, which is a consortium and they figure it out, right? The first version they roll out is always the CUDA version. Yeah. And because CUDA is the dominant language, right? So if you're sitting on AMD and then you go like, oh, there's a new version of PyTorch, and you go like, shit, I have to wait for the AMD guys to like update it so that I can use the new version, which has got the sexy, I don't know, mixture of experts and all that kind of stuff. But the people on NVIDIA are having a great time. So I think that is what is meant by the CUDA lock-in. However, if it turns out that you kind of like AMD because AMD is a cheaper equipment and price performance is better and that kind of stuff, actually you can live with with AMD on the inference level. Do you know what I mean? Yeah. So for a lot of times, if you're trying to do new cutting edge things, NVIDIA's great. But if you're going to just run something on a price performance, there are many other platforms. Yeah. So that is what I mean by, other people who are trying to do that, right? Okay. So we've got to call out a few names, right? So in this sort of neo-cloud, neo-GPU areas, there's a couple of common names. But before we go there, let's just talk about some of the names that we always forget about, or I always forget about. So you've got Intel, you've got AMD, you've actually got Google, right? Yeah. So Google's got its TPU, and Google's starting to actually allow people to use TPU as a service provider. Amazon's got Trainium, but they're not doing that yet. And then you've got people like Grok. But the problem with Grok is they just sell tokens because you can't really access their hardware. And, there are specific reasons why they don't do that. And then there is companies like Cerebus, which is doing a completely new thing where the whole computer is the whole wafer and it's all very closed in Samba Nova. But my favorite one, which I always talk about, is Tenstorrent. So Tenstorrent started by Jim Keller. And what they're taking as an approach is fully open sourced. So today, if you bought a Tenstorrent card, right, you put it in, you download from GitHub, everything, you can basically control right to the lowest level the kernels that write to the Tenstorrent, AI NPU infrastructure. It's not GPU, it's NPU. all the way, you can push it all the way up to PyTorch. But you better be like a hardcore engineer, right? And so for like 99% of people, they don't do that. But if you're going to run a neo cloud and you want to go for perf per dollar, you want to go for like efficiency, there's an argument that AMD, there's an argument that Tenstorrent can also provide that. There's an argument that you run a hybrid cluster with NVIDIA, AMD, Tenstorrent, and you drop the workloads that work best for each architecture, and you get a faster, cheaper, and better service.
Yeah.
So there's a lot of new ways of skinning the cat, and it isn't just a pure green infrastructure, pure NVLink 72. That's all going to change. That's my thesis.
So the future is hybrid.
The future is just heterogeneous. The future is
okay.
And that's not because NVIDIA is screwing up. It's just because the AI demand is so great. There's going to be many ways of skinning the cat. And NVIDIA, by definition, doesn't want to have every single abstraction. They will focus on the abstractions they're great at, that are the most profitable, and they're going to deliver that at pace. Yeah.
On that note, I wanted to ask you a little bit about Tenstorrent. Jim Keller is known as, I think some people call him the chip Ronin.
Yeah.
Because his job, I mean, for my friends, and I spoke to people in this space, they say that, every time a company is failing, they will get him in, and then he literally reverses their fortunes, right? So the famous example is how he literally revived AMD.
Yeah, twice.
Yeah. and now he's someone that you are working with as well.
I met Jim 3 years ago when he came to Singapore. He was looking at a wafer fab, and then I spent some time with him. I famously cooked him a pizza, so he remembers me, and so on and so forth. And again, Openspace Capital, we realized, 3 years ago that we better be good at AI. Like, if we're not good at AI, we're gonna not understand it. So, I spent time with Jim and some of his ecosystem in the Silicon Valley, especially on the compute level, right? Not just him, but people like Raja Koduri, who is like, he's called the godfather of the GPU at AMD. I met people like Debbie Mazar at Head Computing, trying to create the fastest RISC-V CPU. So it's not just Jim, but it's a whole group of people, because by definition, we need to bring that knowledge back into open space. And even just understanding the abstraction helps you understand the agentic, it helps you understand the whole thing, right? But Jim's an interesting person because he is really a first principle thinker. So first of all, he's a relatively introverted guy. He thinks very deeply. And the first thing I noticed about Jim is that his signal-noise ratio is relatively pure. In other words, he doesn't say anything until he says something, and what he says is usually quite profound. And you can watch him on YouTube. He's the only guy, not only did he did a lot of good work at AMD, but he's the only guy who's worked for Steve Jobs, because he did the Apple Silicon, and Elon Musk. He actually started the Dojo project. So there's a Lex Friedman podcast, and you can search for it on YouTube. The difference between Steve Jobs and Elon Musk as a manager, and Jim Keller will actually give that abstraction. So I spent time with him because he's connected to my overall thesis that if you want to understand something, you got to go from first principle thinkers. So that's why Jim is quite an interesting person. He's never been a commercial leader because he's been a chip designer. Right? So to be specific, he did the K9 chip. And the K9 chip was in 1999 for AMD. That was the first chip that was as fast as the Intel chips. And that freaked Intel out. And then there's an argument that for the rest of the next 10 years, Intel was just super focused on killing AMD. So they sold the ARM division to Marvell. And so they didn't do the iPhone chip in 2005. Intel did a lot of things which people have said, oh my God, you should have totally done it, right? But that's because Intel was so focused on making sure they did not lose the x86 war against AMD. That was Jim. And then, around 2010, 2011, if I'm not wrong, Intel actually succeeded, and AMD was in a lot of financial difficulties. And so Jim came back and did the Zen architecture, which today has put AMD back on the map and has all that capabilities. So he's always been a chip designer, but he's never been the CEO of a company. So Tenstorrent is the first time that he's the CEO of a company. And he's not a young guy. Huh? He's above the age of 60. So in this business, he's got the chops, and that's why I like spending time with him. I learned so much from him and the people that are around him, and the technical excellence and the ability to always think about the future and just really just not worry about what is happening right now, but paint a picture of where it's going to be in 3 to 5 years' time.
I asked about Jim Keller because I thought that if you think about talent in this AI era, right? I think a lot of times people look at the CEOs of the big tech companies, right? They think about the Sam Altmans of the world, but there is also a Jim Kellers of the world. And going back to Singapore, we need talent to thrive in the world that we live in. Regardless of which era we grew up in, like for us to survive, we need talent, and you need talent density. So then the question becomes like,
how are we gonna do it?
How are we gonna get the Jim Keller-like people, right, to be in Singapore to build those companies?
The last thing I'll say is that, to run a chip company, you better be a computer engineer, right? Jensen is one.
Yep.
I think Jim is another one.
Lisa's
one. So that goes without saying, right? So we'll put that aside. I think what you're trying to say is like, how does Singapore compete in the world now that AI is the dominant flavor? Well, the good news is that we don't compete because of oil, because of natural resources, because we don't have any of that, or because of, I don't know, some sort of size of population or size of market. We need to make sure that the best and the brightest in the AI field choose Singapore as a place to reside. And I'll tell you the piece of good news. I believe that that is absolutely happening, right? So because of the geopolitics of AI and because how it is so important to win the war, America is the left side and China is the right side. And Singapore is really the Switzerland of this whole thing. We're seeing a lot of teams relocate here. Manus AI is a great example, right? So Manus AI was originally founded in China, now based in Singapore. Benchmark Capital, which is a very famous US venture capitalist, has invested in them and it's based out in Singapore. And I just met like a team of people doing a video model, right? So like something like Sora 2 or the Google Nano Banana, but they're a team, no guesses, from China, really, really good, have a strong track record in one of the big Chinese tech companies. If they've spun off, they're in Singapore. This is not going to stop. We're going to see a lot of these companies. I think the challenge is to make sure that Singapore is not perceived as a place where we're just a pass-through or we're some sort of geopolitical pawn in this whole thing. That somehow this is actually real and that the models and the abstractions that are created here are not geopolitically connected to one of the two giants, China and America. I think we've got the track record to do it. Singapore has always been able to balance the two large 600-pound gorillas. And I look forward to working with these people. But are these like some of the most talented individuals and the most sort of excellent in their space? Absolutely. Do they live in Singapore? Absolutely. Will they increasingly live more in Singapore? I have no doubt about it. Where else are you going to be able to sort of conduct from a neutral platform in the world? You can't do it in Europe. I mean, Europe has got a lot of regulations as well. I'm literally thinking about it. India, perhaps. But Singapore's cool. It's safe. Good schools. We're the Switzerland of AI. Now, if that happens, over a period of 3 to 5 years, a lot of Singaporeans are going to learn that craft. And that skill transfers there. And then maybe the next iteration may include some really hardcore Singaporeans. And by the way, there are also hardcore Singaporeans who are doing this, but some of them might live in the valley. I met one guy which I was very impressed with. And he's doing some crazy sort of inference model, which is really cutting edge, right? He's coding kernels, he's coding abstractions all the way down to the GPUs of AMD and NVIDIA. And I was very shocked. And he's a Singaporean guy. I think Singapore needs to understand that we've got really, really great talent. And just because it's made in Singapore just doesn't mean that it's shit. Like I repeat again, it's not shit. Israel has managed to convince everybody in the world that if you just say it's really technology, everyone goes, this is very good. This is really. we have to go like, this is Singaporean technology. Oh, wow, this is very good. Like the accent as it come out. And I think over time, if we deliver, we will have more of that. But the mind shift has to happen from the Singaporeans, because sometimes, see, the world already understands that Singapore technology is awesome. Sometimes the people who really don't believe it are the Singaporeans. and I'll leave it as that. I don't want to name who, right? Sometimes it might include me, by the way. I'll be very clear about it, right? I always worry about whether we're not the best in the world. But I've talked to so many people in the world that actually optoelectronics, research from A-Star, NUS professors, people migrating here. Like, we really have to start telling people, like, we're as cool as everybody else.
From a previous interview I did with Indonesia, and one of the things that I found to be extremely insightful was that it took him 20 years to go from like being at Texas Instruments to starting UTech.
Yeah.
And like for the hard tech or like deep tech, in his field, especially back then, starting UTech as this testing and assembling center for a lot of these semicons, you really need time to build that technical expertise.
Yeah,
And sometimes it just takes you 20 years to build that, and then like you can build a $1 billion company out of
correct.
And maybe it requires Singaporeans to kind of understand that you need gestational periods, or you need to accept that as part of the game.
You do and you don't. Like, I'll give you the funny story. Like, 20 years ago, when I was a young man in the 20s, I go to China, and everyone drove very badly because they only got their licenses. Nobody had a license that was longer than 5 years, right? So in that regard, it's like beautiful, right? Like, if you're talented at driving, you're probably going to be the best car driver in China, right? So I think in certain fields, like especially in AI model training, and Stephen Witt actually made a good point. Like, AI was not the cool thing that you did 10, 15 years ago. It was the graveyard of professions. You became a professor, right? I love that thing from Stephen. And it was only in 2015, right? I'm going to postulate, only in 2015 that the whole thing started. And what I mean by that, OpenAI was formed in 2015. Then it took 3 years for them to figure things out. Then 2017 was the attention is all you need paper from Google. And then OpenAI came out with ChatGPT 1 in 18, ChatGPT 2 in 19, and ChatGPT 3 in 2020. By that time, people were still saying, I don't think this is really going to work. And it was only March of 2023 that ChatGPT 4 came out. And if you chart it, and we've done this at Openspace Capital, the capex just goes. So my joke is always, if you invested in NVIDIA before March 2023, you were lucky, you weren't smart, right? But my point being is that in the field of AI, a 31 or 32-year-old guy or girl who actually focused on it when it was not cool is probably the world's leading researcher right now, right? So it's different from an industry construct than the person who's worked for TSMC for 20 years and so on and so forth. And what's interesting is in the chip world, the Jim Kellers of the world, all those kind of people, they're all above the age of 50. Like, when you go to Tenstoren, like all the senior leaders, they're all above the age of 50.
They're senior.
When you look at OpenAI, everybody's all below the age of 40, right? So I think that's the difference currently in the construct of the industry.
There's a point you made, which is that you have to do things that are uncool. The challenge of being in Singapore is that once you've established yourself as a financial hub, is that financial services tend to overly index on sucking the talent up. So there's an opportunity cost of going to having that, having yourself set up as a financial hub, which is also why, for example, London is a financial hub, but it's not known to be where all the great tech companies are born. Can Singapore balance that contribution?
You can. Look, one of the great things about Singapore is that we are actually essentially a centralized economy, right? And I'll prove it to you with the following statistics, right? So I just went to Hungary. I went to Budapest. I went to talk, and as part of the talk, I did some research. And ChatGPT would tell you that 40% of Hungary's GDP is controlled by state-owned enterprises. And then when you type in like Singapore, they go like, only 15% of Singapore's GDP is controlled by the government services, right? And I went, oh, that's quite cool. Oh, by the way, think about it. Singapore's GDP is like 600 billion. The government's budget is like 100 billion. So it does make, it's about right, 15%. But what we forget is like Singapore Inc. also owns like DBS and, Singapore Airlines and CapitaLand. And I just thought, like, actually, if you add all the corporatized state-owned companies that Singapore has, we're probably around 40%. So my point being is that Singapore is not really the free market environment where, 5 families in Southeast Asia control like a country, right? Or 100 people in America are equally important in the government of America, right? So Singapore Inc. becomes, and the Singapore government becomes a very pivotal decision maker in figuring out what's the next thing Singapore invests in. Would you agree?
Yeah.
So if Singapore decides that AI is very important and that we need to get AI as a core part of our strategy, then we could be able to execute that.
Yeah.
Right? But it takes the government to decide, well, finance is cool, right? But over the next 15 years, we better invest in AI-related things. And at first, in the first 3 to 5 years, people might be scratching their heads, or maybe the population might be going, I don't know why you all do this AI thing. I guess AI thing got no revenue. I think it's a bubble, right?
Yeah.
But Singapore leadership has to have this belief that it goes, that's fine. You'll figure out that we got it correct in about 5-10 years' time.
Yeah.
And by the way, some of the projects that we invest in will not succeed, right?
Yeah.
And we have the resilience and also the belief that we're going to actually blow up some resources by going down wrong paths. But it's worth it for going down that path. Because if we don't, we lose like it'd be very hard to play catch up.
Yeah.
And so I think just from that abstraction, I think it can be done, right?
Yeah.
But it's not going to come from the Elon Musks of the world necessarily. I think there will be, obviously, in Singapore. I think Singapore is very free market, of course, right? You look at the Singapore Stock Exchange now deciding to be revitalized. The government comes in and says, we're going to put together this $5 billion equity department. Everyone jumps on the bandwagon because we've got that reputation and the free market flywheel happens. But I think in Singapore, the government does provide a much more influence than many other countries in the world.
Yeah.
And I believe that they have identified AI as important because we do have a long-term planning approach to things. So I think it's possible.
Yeah.
What we need to avoid is over-optimizing on success. So what do I mean by that, right? So don't take it from me, take it from Clay Christensen. So Clay Christensen is the professor that wrote that famous book, that S-curve.
Yep.
And what he said is that any new technology, by definition, usually comes out less efficient than the current existing technology, but over time, it will become better.
Yeah.
Right? So the example he gives is the 1.8-inch hard disk drive, right?
Yeah.
The hard disk drive like 5-inch, 3-inch, and then somebody makes a 1.8-inch hard disk drive. And nobody knew what to do with it until Steve Jobs came up and invented the iPod, which was the perfect thing for the 1.8-inch hard drive. If you were the top sales guy at Seagate, you were not going to be selling the 1.8-inch hard drive.
Yeah.
So again, similarly, in the Singapore government context, we need to always invest in a certain amount of speculative things that we know in time will be the new S-curve, and have the confidence to know that of the 10 projects that we do that are speculative, 8 will not succeed. And don't be too hard on ourselves, because it's worth being in the forefront of the 2 things. And this comes back to the Singaporean mentality. I was from Raffles, right? So I always get all the answers correct, always get the things correct. Don't go and do this, don't go and do that, right? I could have easily been a banker, but I went off and started a TV network. Like, by definition, I think Singapore should not over-optimize on efficiency. We should be strong enough to know that we have to make bets which currently at this point in time look unreasonable. I fear if we don't do that, we don't keep our vibrancy in Singapore and we fail as a nation. That's it.
Yeah. The last question actually I have for you was the question I ask every guest is that, knowing where you are now, if you had to give one piece of advice to a fresh graduate entering today's working world, then what would that be?
I wrote down something for you, Keith. Okay. I think you do 5 things. All right, so I'm going to take my glasses off. It doesn't hurt to be ridiculously hardworking.
Yeah.
Right? You're in your 20s. Just be ridiculously hardworking. Work on the weekends. When I was an investment banker, I worked a lot because you're honing your craft. Right? If you can learn 5 years of skill in 2 years because you're working 80 hours a week and you're just very good at PowerPoint or Excel spreadsheet, just work ridiculously hard. Okay. The second thing is your reputation's everything. And what I mean is that I've known some of my peer group in their 20s who, took shortcuts, right? And maybe scammed 1 or 2 people and so on and so forth. and now they're in their 50s and nobody wants to do business with them. It's really true. Like in your cohort, Keith, there'll be one guy, I guarantee you, who's not in that WhatsApp group. Say, hey, don't talk to that guy. That guy's a scam artist. And when you talk to him, most of the time that person doesn't actually know that everybody else doesn't want to do business with them. So they lament and they go like, oh my God, life is so hard. It's really just for them. So your reputation is very important. The third thing is actually likability, right? So when I was young, and I still think I am, I'm just an arrogant guy, right? Like I speak very honestly, and it comes from an insecurity, right? Like don't be that person. Like just, be likable, right? And I think when you do all those three things, just remember the most important thing as a young person is to do a good job for your boss. Right? And irrespective whether your boss is a good boss or a bad, but just do a good job for your boss. You then create the final reputation, which is that you're a reliable human being. You can deliver on whatever the task at hand is. And then in your network, you'll just be known as somebody that you can do business with. And when I transitioned from being an entrepreneur at Asian Food Channel and I wanted to be a venture capitalist, there were a couple of people who said, you know what, you've got no track record, but I'll back you. And these were actually people around the same age as me. And then a couple of people were like 10 years older than me. And so I think that if you do all those things, work really, really hard, be reliable, be likable, don't cheat anybody, invariably over time, people want to do business with you, and then you will be successful because that's how success gets generated. It's never overnight. I've never seen sustainable success be generated overnight. That would be my advice to young people.
It takes years to build an overnight success.
That's literally what I write on my website, right? The average time it takes to be an overnight success is about 10 years.
That's why. With that, Hien, thank you for coming on.
I hope that was helpful.
Thank you for listening to today's episode. If you are watching this on YouTube, please consider subscribing and turning on notifications for whenever new episodes are out. If you're on Spotify or Apple, it would help us greatly if you could leave a 5-star review on those platforms. Once again, thank you for tuning in to the Front Row Podcast.